Good morning, everyone. The stock market had a nice bounce on Thursday, but overall, I am personally not impressed. NASDAQ up 1.14%, running close to its 50-day moving average. Volume actually came in slightly at the 50-day moving average, well below the day before. Not exactly what you want to see if you have a legitimate bounce test. On top of that, the New York Stock Exchange, as you can see, is still far away from its 50-day moving average. S&P 500, the same thing. Dow Jones Industrial average up 1.22%. Basically leading the way on the day with S&P 500. And the biggest tell for me is a Russell 2000 lagging, only up 0.95%. A real strong market, this index leads, so it's not good to see it lagging. And the Dow leading, it's not good at all. On top of that, utilities, they're the stocks that I'm noticing on my charts, like ETR. You can see some of the pocket pivot point buy signals lately, the accumulation, and then also I've noticed, some oil stocks like ERF, for example, that are starting to perform very well. And then on top of that, AIV, a REIT, a real estate investment. I see these stocks starting to show up. So you got real estate, investment trust, oil, and utilities. They normally lead in a bear market. Starting to see some, nice movement out of them. That's a big tell for me. And overall, we're starting to get that same price action we saw in 2011, 2012. And you know what I'm talking about. The down 1%, down 1.14%, up 1.77%, down 2.61%, up 0.86%, down 0.5%, up 1.14%. The chop and the churn is here. On top of that, my scans are lame. I'm just going to randomly pick this one of high price stocks. You can watch the names on the upper left corner. And once we get past the first few on this list, you can see, yeah, we do, in fact, have some base building. However, what we have here that we did not have before is base building with tons of red and yellow BOP in it and tons of big, tall red bars and smaller green bars. We did not see this before throughout the uptrend. We got some yellow, we got some red. We didn't have this much consistent yellow and red. And as you can see just by looking at the structure of the charts, like GD looks good, but look, it's an aerospace and defense stock, another sector that does well in poor market environments. So further confirmation. But overall, outside of Tesla, which is holding up, on Facebook, overall, these bases don't look good. You can just see there is way more yellow and red out there than green. Way more red, actually. BXP is showing up right here. That's looking good. There's a real estate investment trust. So overall, the scans just don't look healthy. And now I'm flying through them, and you can really start to see all the red. This is the stuff that my eye picks up on and kind of confirms the actual price and technical signals. Let's say that we're pulling back now, and all these stocks look like it did, back here in August maybe, or even in June. Even in June, you can see that there's not that much red. Then it's a different story. But right now, these bases, while they're not horrible, they're starting to look a little fragile, so we'll see how it turns out. On top of that, an up day today, but I had 4 sell signals. 2 partial ones, and it's only now because we're under sell signal. CLFD is a 25% sell with the heavier volume closed below the 10-day moving average. And Moser is going to be Moser, is going to be a 20% sell because it's a low volume close below the 20-day moving average. You can go ahead and use a 25% sell signal if you want, or 50%, I don't care. Lower volume, overall, going to be 20%. If it comes down to being like 18 or 22% with my sell, it's going 22%. And on top of that, the biggest tell for me overall, which is an earnings season, but remember, previous earnings season, 2012, we did not have this happen to us. CALD, big failure overall, wipes out almost all the games with that huge volume. I don't care about the tail. It's not a 50% sell. It's about protecting capital here, and called as a full sell. So we're going to take our small games and get out of Dodge on that one. And then with our new recent long, we went long, 2% of our account capital, cut 75% of immediately, added back a simple 1% because the chart pattern was looking strong. But this goes to show you, when the tape ain't right, the chart pattern don't mean shit. Fundamentals are not. And Mont proves it by cratering today 17% on heavy volume. This type of action is indicative of me that we're either A, in a choppy market environment, churning market environment, or B, a sell signal, quote, quote, bearish market environment. It's hard for me after this many years to be bullish or bearish. Internally, I might have been bullish during the uptrends because I love making money, but shit, we don't have the 1996 to 2008 market anymore. We have a QE market. In 2013 was great, but once again, where were my 1,000% winners? Where were my 500% winners? And I had a couple of 200% winners, but where were the handful to two handfuls of 100+% winners that we would constantly rotate through during uptrends? They're still not here. All QE telling me we still need a big fat market reset. Not sure we're going to get it. However, I do have one actionable signal, and unfortunately, none of you guys should probably touch it. Me, 1% of my account value in the risk account, and it's going to be a limited order. But PRIS has got a great chart, back-to-back pocket pivot point signals over the past 5 days. Not back-to-back, but two pocket pivot signals in 2 days. Great chart pattern. Let's give it a try. It is a Spain stock, and Spain, country's doing pretty bad. Maybe all the bad news is in. You can look at the weekly chart and see that, something does look like something's happening there. So whatever. It's just a small trade. 1% of my account capital with the $1 commission ain't going to hurt if I'm wrong. So I'm going to take a stab at it. You guys probably should. All right, everyone. Apologize about this craziness I'm in the middle of. Hopefully it'll be over in a couple of weeks. Aloha.